Every 4 months or so, 3 or 4 months, you should be getting your credit report just to make sure there are no inconsistencies, no anonymous readings on it. We're going to break down the sections of the credit report that you're going to be looking at this month. And you're also going to be giving you some tips on what to do when you're making that major purchase and how you can help yourself without paying someone to do it for you. This is Antoine Anderson, and thank you for watching the Ujamaa Network. Let's get into it. The Fair Isaac Company, or most of us know it as FICO, is the corporation that is in charge of getting those metrics together to what goes into your credit report. Those algorithms that they use to determine your credit worthiness are then passed on to you in the form of a credit report. Now, what we don't often take into consideration is that Fair Isaac also supplies the three majors with a separate set of metrics on how they gauge your credit worthiness. That said, it is up to us to make sure that everything on our credit report, the thing that we're able to see, is accurate and up to date. But what is actually on that credit report? And that's what we're going to be going over right now. One of the reasons why getting that credit report and keeping it secure is so important. It literally contains everything about you, your purchase history, everything, starting off with your name, obviously, but it also has your social security number, your date of birth, and your employment history. These things are showing up on your credit report, and that is a gold mine for people who are trying to get at you. It also has your previous addresses and current address. So again, one of those things that you want to keep out of the hands of any unscrupulous people. That section will also list any disputes that you have with any of the creditors on your report. You definitely want to pay attention to that because this is key to where some of these more unscrupulous credit repair companies will operate. And we'll get into that later on in the video. But also, what's on your credit report, obviously, is the accounts that were opened and what day they were open and with who they were open with. It's going to list the terms of the payments that you have been making, whether you were delinquent or not, any outstanding balances. That is all information that will start to affect or factor in and what your rates are that you're going to be paying. But the big section that you want to pay attention to is what's in that public records section. This section alone, if anything is in there, you're automatically going to lose anywhere from 30 to 50 points on your credit score. That's just what it is. It lists things like lawsuits, liens, bankruptcies, and the kicker for a lot of people is going to be that child support. Anything missing, any delinquent child support, any past due child support payments. This reason alone is why there needs to be some type of child support reform, because with anything showing up on the public record section of your credit report, you are guaranteed to either not get credit, and I mentioned earlier 20 to 50 points off of your credit point. It's probably much higher than that, but really anything that shows in that section, especially that child support, if you're one of those individuals who are having to pay it and you fell behind, it is going to affect your ability to get credit in the future. These are the many ways that you can find yourself in a bad situation where you really don't have a way out unless you do what it takes to kind of correct what's on your credit report and get everything in order. And we'll go into that right now as well. The best defense to having a bad credit score is go on the offense and make sure that you're paying all of your bills on time, obviously. Then you have the option here to, if you're utilizing your credit, do not max out your lines. Credit lenders typically prefer if you stay under 30% of your available credit. Pay down any card balances that you have. But the key here to actually doing something that won't cost you a dime is to open up a savings account. Now, I say it won't cost you a dime. Be very careful of which savings accounts you open up at which institutions. Some have free savings accounts, that won't charge you any fees for them holding your money. But just having one and putting a little cash aside will improve your credit report. There's also one thing that you can do that may help out. It doesn't always work, but it's called a goodwill adjustment. If you've been making your payments on time, 12 consecutive months, you can write that creditor or that lender and say, hey, any delinquencies on my report, would you consider taking them off since I've been such a studious and attentive borrower? Any past delinquencies, would you mind just taking them off? It'll really help me out. It has to be submitted in writing, and it may not go your way. They may not do it. They don't have to, but it's just one of those things that keeps a good relationship going between you and your creditor. Now, this final note has to do with the biggest or second biggest purchase you may ever have to make, and that's buying a vehicle and how your credit affects that. There are multiple pitfalls on why this thing alone is accounts for so many drops in your credit score. Think about when you go out and if you're trying to finance a car, if you're not paying for that car in cash, you are literally setting yourself up for a devastating blow on your credit report. There are major pitfalls. Most dealers will require that you have your credit run. They're going to do what is called a soft inquiry. No such thing. Every time you get an inquiry on your credit report, it is 4 points. Do not get it twisted. And they don't have any obligation to tell you that it's even being run. If you go in and asking for financing for your vehicle that you want to buy, they're going to run it through multiple credit agencies to try to get you the best deal. That's all well and good, but keep in mind each inquiry is 4 points off your credit. So if you came in there with a 720 and you're on that bubble between 680 and 720, means that your rate is going to be affected. Somebody with a 720 credit score will probably qualify for a 6% rate, or at these rates, a 9 or 10% rate. 20 points in the negative. After you start this process, you may just have added $200 more per month because you're now getting a higher interest rate on that loan because your credit score at the time you get in that car has just gone down. And not only that, same thing with the insurance companies. They're going to run your credit every time you do it. Now, is there a way to try to prevent that? You can ask a dealer, hey, if you plan on running my credit report, only run it one time. If they run it any more than that, you can dispute that. Same thing with your insurance company. Do not allow multiple runs of this credit report or credit inquiry on your credit report. That is going to set you up for a big hit on your score. Just keep that in mind. Every time that credit report is run, it is 4 points off your credit score, and we just cannot afford that at this point in time. Let me know what you think about the content here. It's been a pleasure bringing it to you. These are things that I've gone through personally, and I definitely want to make sure that you're doing everything you can to build generational wealth and keep money in your pocket. Talk to you very, very soon.